Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Tons of things to cover today. Action in the earnings market, lots of movers pre-market. I'll give you the technical trading levels. We're going to talk about the rest of the week and what to look forward to, including Alphabet earnings after the bell today, along with AMD. At 10 a.m. today, we'll get the JOLTS number, job openings. Tomorrow, ADP private sector. Friday, the non-farm payrolls. And then, of course, next week, election and the Federal Reserve meeting. It begins, folks. I said this week and next week we're going to be wild, and it is starting that way. All right, let's get right into the charts. Let's follow up and see what the S&P is looking like here today. If we take a look at the S&P, we are gently fading to the downside here. And again, there were some earnings this morning that are giving people a little bit of pause, but obviously there shouldn't be any major action until after the bell today for earnings when we get Alphabet and AMD. Remember, AMD, semiconductor, so that will affect the NVIDIAs of the world, and then Google or / Alphabet is a major trillion-dollar name, and that will obviously impact the other names like Meta because of advertising. All right. So yesterday, this is where yesterday began. I talked about this in Trading the Close. It was one of those gentle, light volume down kind of moves here, just a gentle fade. We did end higher across the board, but you can see it's just kind of done the same thing, maybe a little bit steeper here into the open today, setting up for a slightly lower open in the S&P 500. Now, looking at the technical chart here, right? So this is, again, very important because I've been guiding you guys on what to expect. Here's your wedge pattern, right? And again, to understand wedge patterns, all you do to create wedge patterns is connecting the dots, right? The lows here to here, right through here, and then here's where we broke down. And you can see the high end of the wedge beautifully right here to right in here, and we kissed it there and hit it here. So there's your wedge pattern, right? Essentially, a wedge pattern is a triangle. The key is looking for wedge patterns that give you a high probability. Upsloping, steep upsloping wedge patterns like this one, these ones have a high propensity to break to the downside, right? Now, if we look at downsloping wedge patterns, this is one of my favorite chart setups for trading on the long side with stocks. Sharp downsloping wedges, when they break out, they go parabolic. Wolf was one of these setups, which again ran 100%. I gave it to you guys in the game plan at around $8. It went as high as 16 to 17 within about 2 to 3 weeks. Incredible breakout and short squeeze on that. And I'll have more of those for you guys. Those of you that are loyal watchers, you'll pick up on them as I give you guys them. Now, the key here is understanding that we broke here, but notice it's going like this. All right, now again, what I see when I see that is I see consolidation. I see that as long as we remain below the lower line of the wedge pattern, the probability, and remember, everything technical analysis is probability based, is that you favor a down move to this line here. Why that line? Because that was your former major pivot, right? So again, major pivots are denoted by big moves to the upside followed by big moves to the downside. You know, this would not be a major pivot, something like that. That's not a major pivot, right? It doesn't have that big move to the downside. So those are major pivots on the upside. Downside major pivots would be drops, and then like this, we have a significant move down, significant move up versus something like this, like that. I mean, that's not a major pivot, right? All right, so the idea is that probability-wise, it's favoring a move to this level. That will be major technical support. Now, many people would ask, well, does that mean the top's in? Are we going to drop to the downside? Are we going to break? The answer is, and this is the truthful answer, is we don't know yet. Why don't we know? Because we don't know how price is acting at support. What you have to remember, a good technician respects support and resistance until it's broken. And for me, breaking it is confirmation. So, for instance, if we come down like this and we break and confirm, okay, now it's game on. Now there's no major support until probably down here. And then down here are the August lows. But as long as we're above it, you would assume that the uptrend is still intact. Therefore, this would lead to that until proven otherwise. That is the most probable outcome. Now listen, I'm talking like 10 steps ahead here, so there's many variables that can change, but I always like to just remind people to never assume something is going to break when it's coming into support until it does. And that can be talked about with Bitcoin right now. Bitcoin's coming up to 74,000, which was the previous all-time high. Everyone's getting so excited. All right, here we go, the run to 100,000. It may be the run to 100,000, but we need to respect the 74,000 level until it's broken and confirmed above, which then opens the gate to that bigger move to the upside. All right, lots of good little points to go over there. All right, next up, let's talk about why the markets continue to fade here. If we look at the charts, guys, take a look at this. What we have is this 10-year yield, which is slowly coming up into the target that I gave you guys like 2 months ago. When we broke down, this is a classic wedge pattern breakdown. So here's another wedge. This is a much more sideways wedge. So sideways wedges, you don't know if they're going to break out or break down. You have to look at other things. In this case, it obviously broke down. By the way, here's where it closed below, and here's where it confirmed. So now it's a real breakdown. So here was support. You didn't know it was going to break until it confirms. Now it's a real break. It continued down. What happens when you break down from levels? Oftentimes you do what's called a retrace to the scene of the crime. The key is this, is that as a trader, I am looking to short this level here to the downside. All right, we'll even put it in, we'll leave it as that in green since we'll be shorting and making money if that works out. But the idea here is you're basically kissing your resistance. You should expect, and this is probability based, that you should see a resistance and a push down to the downside. It should reject that level. If you looked at 100 of these setups, you would see about 80 of them out of 100 reject the level, push it back down. That's, again, going with probability, which is key for a technician of the charts. All right. Let's get into some earnings here, guys. Take a look at this chart here on Ford. Ford getting absolutely annihilated on earnings. Again, this stock is just struggling so immensely. If we go to the daily chart, I want to show you this, right? So if we look at the daily chart, what type of pattern is this? In fact, I want to go over to the big board and just talk through it a little bit here. So if we look at this pattern, and this would be a pattern recognition test for you guys at home, is that when you have a big move down here, let me do it so I can draw a big move down and then a pattern like that. What type of pattern is that? Is that a bull flag? Is that a bear flag? We should all say bear flag, right? And the answer would be correct, right? That's an inside. Here's your flagpole. Here's your flag pattern. Now, flag patterns can be like this. They can go like that. I mean, it doesn't matter. The point is, it's the consolidation in the lower range here that is overall telling you that something is amiss. It's not getting a bunch of institutions to rip it back up. It's struggling. So you're getting some buyers, but there's also a lot of sellers on the high end, right? So sellers are meeting buyers, creating this sideways chop. The stock is trading down. The two levels I'm watching for on here, there's a 1033 level. So 1033 right here. I'll write it up here so it's a little bit bigger. 1033 is first technical support. And then this level right down here, it might be hard for you to see, but this level here is at 1015. So these would be the two trading opportunity levels that I'll be watching today in the Apex Live day trading room, which is right where I go right after this broadcast to kind of walk people through and help them trade, and I trade as well as do all the traders on the floor out here just beyond this studio. We're all trading and giving out our exact entries and exits. All right, we got to talk about DH Horton, guys. So DH Horton, look at this chart. Holy cow, this is a housing stock, home builder. It is getting crushed on earnings. It just tagged a major technical level here. If we go to the daily chart, I want to show you where this level comes from. This is a gap fill right here. So it just tagged support. That's amazing. So that was technically going to be my long level, but it's there now. So again, I can't trade it. I'm doing this broadcast. But the point being is this would be a support level where you'd expect some sort of bounce. If it breaks this level, my next level is this gap fill here at around 152. So that's another level. But my point here is that these home builders have been in the stratosphere. KBH, by the way, wow. I still have this pattern up. Look at this. You guys know what this is? Head and shoulder pattern. This is going to break today, and it's already down. KBH in sympathy is getting hammered today, this morning. But these home builders, I've said this for a while, home builders are going to slow down. There was this narrative that was spewed for the last 6 months to a year that home builders were invincible because there was so much demand on the sidelines from people that wanted to buy that as soon as prices came down an inch or no one would put their house on the market because they had a 3% or 4% interest rate. Nonsense. When situations in life change, people have to make decisions. And if they lose their job, if things get harder, if income taxes or residential real estate taxes go up or insurance, I mean, this is the biggest killer, right? I see this with my house, is that every year the real estate taxes are going up and the home insurance, especially here in Florida, holy cow, it just keeps going to the moon. It's making it unaffordable to own a home. All right, you thought high prices were making it unaffordable. Now throw in all these ancillary costs. And by the way, we're just talking about those. We're not talking about all the other costs of owning a home, of keeping that home up in good shape. But the point being is that home prices are going to come down here, and we're starting to see the weakness in the home builders, not only because of rates, but also because there are people that are just like, I can't buy a home. Why would I buy a home and pay these ridiculous levels? Either way, DR Horton, watch that level. All right, next one, let's look here at JetBlue. JetBlue is falling on earnings here this morning. Nice dip. It came all the way down to about 640, getting a little bit of a technical bounce. If we look at the chart here, there was an upsloping trend line that it looks like it will break today. See this trend line? So this is an uptrend. You would consider this an uptrend, and this is now going to break today, which means the airline's likely topped. Now, what's amazing about this is if we look at UAL put in a topping tail yesterday as if people already knew. Also, look at the technical level right here. It was right up into this baseline of resistance. So, again, ridiculous move on UAL. This should be something that drops 20% at some point because it's up basically 100% off of the August lows. But the point being, again, is that the signals here are that airlines are breaking their uptrend, starting with JetBlue earnings here. And you have major technical support at $6. Huge level here at $6, $5.99. This would be a potential day trade level. You can see right there, that is a great level for a potential opportunity. All right, what else is making movements here, guys? RCL. So I'm short RCL with members. We're out of the money slightly, but this is one where it's got this beautiful upsloping wedge pattern. It's not coming to a head just yet, but at the same time, we can look, it is trading down on earnings. Now, my thesis is this, right? If we go to the big board and we just take a look at this. All right, this is a cruise line. All right, historically, you know, good business, awesome, great stuff. Is it a chip stock? Is it a hot technology stock growing at 30% a year? No. So why is it up here from the August lows of $125 to basically $205 to $207 yesterday? That's just since August. We're talking a couple months. The stock is literally up 60%. That is not normal, folks. And we saw it in UAL. United Airlines, a lot of these airlines have gone up parabolic. For some reason, these have been in vogue, but just like the home builders, mark my words, guys, that home builders, we're seeing home building starting to really slow, and obviously the selling and all these things, and prices will start to fall more and more. But same thing here. The consumer is struggling, folks. Real world data here, anecdotal evidence. You know, for instance, one of the key players here at Verified Investing went to Legoland, said there was no lines in Legoland. They said that essentially some of the workers there said that for the last 6 months it has slowed down tremendously. You're seeing that more and more. So the consumer is slowing. Cruise lines like this, even when they report good earnings, it's impossible to maintain these moves to the upside. It can't be done. They're priced to literal perfection. And they can't, no company can be perfect, right? There's always something there amiss. Watch for this. This is going to be support here at around 190, 188. If that breaks, the uptrend wedge has broken, this will come down hard, all right, along with the other cruise lines that put in topping tails and various other things as well. All right, other stocks reporting earnings. Lots of earnings data today, guys. SoFi reported earnings here. If we take a look at this pre-market, this one was up. And now, look, it's starting to come in as well. The issue I have is look at the rally into earnings. Again, this is the trouble. When something rallies significantly into earnings, always remember, even if they beat earnings, and SoFi did and had a great quarter, it's just hard to justify that it's already run up from $7 to $11.50. We're talking about a 50% move up in basically 3 weeks. How does it justify that without curing cancer, for instance, or something crazy like that? And that's really something to understand and kind of be aware of. Price to perfection is a thing, even when it's great earnings. PayPal, look at this drop. PayPal initially flushed today from about $85 down to $73. It then bounced back, but it is down on earnings. Not down enough for me to trade, though, frankly. McDonald's was another one. McDonald's flushing a little bit on earnings, but coming back up. To be honest, McDonald's we all know McDonald's had the big issue over the last week with the E. coli outbreak, so it was already discounted, down a little bit on earnings as they're still seeing people struggle to be able to even afford McDonald's food, but nonetheless, it is down fractionally on earnings. And lastly, a couple other ones here. If we take a look, Pfizer reported phenomenal earnings. Even this is not getting much of a bid. Surged initially and came back in. The one thing I'll say about Pfizer is when I look at this chart, look at this chart here, folks. You see this? So this is at the low end of the chart. It is a defensive name, meaning that once people start to shy away from consumer plays like UAL, travel, Royal Caribbean, from the Googles, the NVIDIAs, I do think money rotates in here. This pays a good dividend. They had monstrous earnings, but it's not going to react until you see a rotation of capital. So that's going to be a key thing to watch there. All right, a couple other things here on the forecast. Let's look at Crocs. Crocs, last I saw, was getting trounced. Look at this chart. Holy cow, Crocs. What a drop on earnings here. And again, it's getting very close to my technical support. You can see this is my high-risk level between 114.50 and 112.50. My lower risk, which, by the way, low risk still has risk, but low risk level is going to be 108.40, gap fill and major technical support over here. All right, we got to go on to Bitcoin, guys. Let's talk some Bitcoin. Over to the big board we go. Take a look at Bitcoin here. What do we have? We have, again, the classic chart setup. Downsloping trend line from here to here, breaks out and confirms, confirmation being really important, retraces, boom, and then up it goes. That happens so often, folks, so often. It does these retraces to what I call the scene of the crime. You've heard me say that a million times in these game plans. And then off to the races. Now it's coming up to first resistance is going to be this high at 72, so 72,000, right? And then if it gets through there, basically 74 is your next resistance. I would not be surprised if it touches and pierces 74, then I would expect a little bit of a check back. So again, maybe up to here, then a check back, and then you want to see, does it go up, or does the stock market start to collapse and go down? But great move on Bitcoin. And again, following suit, I threaded the needle on a short with members in Verified Investing Smart Money Crypto. We shorted it right up here, and we covered right there because I knew the scene of the crime. And then sure enough, right up it goes. It was a beautiful little trading opportunity there as a swing trader. All right. Couple other charts that aren't making much in terms of moves, but we want to cover them really quickly. Gold, I know you gold bugs out there love this. Gold is inching up just a little bit, still stuck in this parallel. Notice again, right now, resistance, the high end of that trend line's around 27.70 to 75. That'll be resistance there. And if we go to silver, silver's getting a little bit of a bid today, so that's positive. Can it get up to my resistance between 35.50 and 36? Next up on oil, let's take a look at oil real quick here. Oil not doing so well, broke below this key technical support. I think it's going here to 65.5. You guys know my longer-term targets are much lower, but it should get some sort of technical bounce off of 65.5 to 65. And then lastly, natural gas here, guys. Nat gas, again, never got up to my shortable level. Got close, though. This was my shortable level, then big pullback. I did add this in. This isn't a tradable level for me. I'm not going to go long off this support, but it just does denote a support level. Remember, not all supports will you buy. Remember that. So there are support and resistance levels that you just say, okay, it's good to know that support or resistance, but you don't necessarily have to react and buy or short there or sell there. And the key being is you have to analyze risk reward. Right? So there's multiple factors that go into why you take a trade. Number one, for a trade level, you want multiple factors that tell you to go long or short, not just support or resistance, but also in terms of analyzing those risk reward factors. All right, so just a reminder, today's a big day. Markets could be a little choppy today, but at the end of the day, at the close, we get obviously AMD earnings, Alphabet earnings, and other earnings after the bell, but those are the two big ones. And then obviously tomorrow, we'll get more mega cap tech. We get the ADP numbers, Friday non-farm payrolls. The rest of the week, we have Meta, Amazon, and Apple all reporting here, and Microsoft in the next few days. And then obviously next week, guys, it's going to be a wild one, a week where we could see some major swings in the market. I'll bring you guys the levels, the technicals, the unbiased analysis based on charts and probabilities. That's all I can offer you, which is much better, in my opinion, than mainstream media narratives or the social media hype that influences so many people to make such bad decisions on investments. Have a great rest of your day. Thank you guys for tuning in. I'll talk to you soon. Take care.